Good afternoon. Welcome to the marketplace. Coming up, dollar demand picks up sharply as most businesses try to restock for the year. Also coming up, Ghana's economy expanded by 3.8% in October last year. We have the latest figures from the Ghana Statistical Service.
In October 2025, agriculture contributed 1.3% to the overall growth of 3.8%. Industry contributed 28.7%, and services contributed the most, 75%.
Also ahead, the United States government announces a 3-year extension of the African Growth and Opportunity Act, easing concerns among beneficiary countries, including Ghana, over continued access to the U.S. market. My name is Darrell Kwao. Thanks for being with us. Details coming up. My name is Darrell Kwao. Thanks for staying with us. First up, the dollar demand from businesses has picked up sharply in recent days. This is reflected in stronger bids submitted by banks at the spot foreign exchange auctions. More in the following report.
Some market watchers, this was expected. The development has been influenced by the fact that most businesses are trying to demand more dollars to finance their imports as they move to restock for the rest of the year. This has resulted in some marginal pressure on the Ghana cedi, which has ended up with some movement, especially on the rates that the commercial banks are quoting. We should also not forget that when the listed companies and some banks start with a dividend payment, we could also witness another round of pressure on the Ghana cedi. For instance, while some $125 million were offered during last Thursday's dollar auction, the bids that came through were more than $300 million. Well, for some, another reason why we are witnessing this is that supply on the market hasn't been that significant in line with demand. But the Bank of Ghana is insisting that there is no need for anyone to panic. This is because they have adequate forex to meet the need of any genuine trades on the market, with reserves reaching almost $14 billion ending last month. They also believe that based on a lot of reforms that has been implemented over the past months, we may not be saddled with that huge depreciation experienced in every first quarter of each year. Last year, the Bank of Ghana spent some $10 billion to meet market liquidity in what has been described as forex intermediation.
All right, joining me on Zoom, Head of Finance at Merban Capital, Nelson Kujo-Kwagweje. Good afternoon to you. So we are told the dollar demand rising sharply is from the manufacturing and energy sectors. How sustained do you expect the current pressure on the cedi to be in the first quarter of 2026?
All right, thank you very much, Darrell. Good afternoon for having me once again. This is a normal annual cyclical phenomenon. 2025, by the end of the first quarter, the cedi depreciated by 5.3%. And so, as your reporter rightly put it, so many factors normally account for the depreciation of the cedi within the first quarter. The first one has to do basically with the fact that businesses really wants to restock, having exhausted their stocks, during Christmas time. And so this is the time to look for the dollars to bring in the needed goods. Again, businesses, especially multinational companies, will start paying dividends to their offshore shareholders. And also speculative activities also, put pressure on the cedi during the first quarter. In terms of how this can be sustained, I think it is too early, considering the fact that the Bank of Ghana has given assurance to everybody, including market players and businesses, that they have the needed forex that they can inject into the market in order to stabilize their cedi. So going forward, I think the intermediation of Bank of Ghana is critical in stabilizing the cedi. I don't foresee the cedi depreciating beyond what we did last year, as in 5.3% at the end of the first quarter of 2025. During the course of the year, Bank of Ghana has rolled out so many regulations and directives regarding, how FX will be dealt with within the market. So I hope those policies will come into interplay in addition to their intermediation in order to stem any depreciation that we may witness within the first quarter.
So you think the Bank of Ghana's planned $1 billion FX intermediation program will be sufficient to stabilize the market?
Well, that would depend on the dynamics of the market. If the market needs more than that, I think the Bank of Ghana will inject more. And if the market needs less than that money, the Bank of Ghana will also inject accordingly. But the overall objective is to make sure that the cedi remains stable for businesses, the cedi remains stable for the government itself and even households. And so as to whether the $1 billion will be enough will be dependent largely on the market dynamics.
So, I mean, how should investors and businesses react to this? I mean, initially you mentioned that this is cyclical.
Well, I think the reaction should not be knee-jerk. This is something that we experience every year. Our only prayers and hope is that this time around we'll do a much more lower depreciation rate as compared to what we did last year. I mean, last year the government was fresh in power. Certain policy decision regarding the first operation wasn't taken. And so we hope that all those policy frameworks that the governor and the team developed last year will be implemented this year. And we expect that to have a positive impact on the Ghana cedi.
All right. In other news, Ghana's economy grew by some 3.8% in October last year. That's according to the latest monthly indicator of economic growth released by the Ghana Statistical Service today. This actually represents a marginal increase over the 3% recorded in October 2024. The expansion was largely driven by activities in the services and manufacturing sectors. I want to ask you about that. But first, let's hear from the government statistician, Dr. Al-Hassan Idrisu.
Contribution to growth tells us how much each sector adds to the total growth rate based on both its size and its growth. In October 2025, agriculture contributed 1.3% to the overall growth of 3.8%. Industry contributed 28.7%, and services contributed the most, 75%. With net indirect taxes contributing negative 4.7% to the overall growth. Together, these contributions sum to the total growth rate of 3.8%. Now, ladies and gentlemen, what are the key takeaways from today's release on the monthly indicator of economic growth for October 2025? Overall growth increased from 3% in October 2024 to 3.8% in October 2025, indicating stronger economic performance. Agriculture grew more slowly in October 2025 than same period in 2024. Industry expanded much faster in October 2025 than same period in 2024. Services maintained strong and stable growth over the period. The sustained upward trend in October suggests positive momentum entering the final quarter of the year, and I'm talking about 2025. While monthly figures can be volatile, the data signals continued expansion, particularly from the services and industry sectors. From the data, we see that the key drivers of the October 2025 growth are manufacturing growth, which actually strengthened industrial performance, communication and trade, which boosted services, and seasonal agricultural activities, especially in the fishing subsector, which supported overall output.
All right, so the government statistician there addressing the press earlier, you're still with me, Dr. Mr. Kwagbaji. What does this say about the strength of our economy going into this new year?
Well, number one, the economy has done pretty well, even though we could have done better, considering the fact that there were significant milestones that we achieved during the course of last year. But although the monthly indicator may not give us a clear picture, however, I'm sure when the data for December is released, we will actually get to know what is the overall growth for the last quarter and that of the entire year. However, I think that going forward, most of this growth should be informed by policy decisions, policies that are intentional, policies that are focused, and policies that are result-oriented. I mean, the director just mentioned that agri couldn't do well in terms of contribution to the overall growth. I think that this will inform policy decision going forward, since agri is the mainstay of our economy, so that we can get more growth from the agricultural sector.
All right, thank you so much, Nelson Kujoko-Agbeji, Head of Finance at Maybank Capital. I appreciate your time on the marketplace. Now, to some other news, the United States government has announced a 3-year extension of the African Growth and Opportunity Act, AGOA, easing concerns among beneficiary countries, including Ghana, over continued access to the U.S. market. AGOA allows Ghana and other eligible countries to export goods to the United States duty-free and quota-free. The trade pact officially expired in September last year, raising fears about its potential impact on exports, jobs, and investment in participating economies. The extension was disclosed by U.S. Ambassador to Ghana, Rolf Olsen, during a bilateral meeting with the Minister of Foreign Affairs, Samuel Okudzeto-Ablakwa, reaffirming the U.S.'s commitment to strengthening trade relations with Ghana and the wider region. You're watching The Marketplace. We are taking a short break. Let's Talk Tech up next. All right, it's our first Let's Talk Tech episode segment for the year. From artificial intelligence to digital payments and data protection, 2026 is shaping up to be a defining year for technology in Ghana, with new tools, policies, and innovations expected to transform how businesses operate and how consumers live and work. Joining me on Zoom to discuss, Henry Kobler, lead for Eyes of Africa. Happy New Year to you. It's been centuries, Henry. So as we begin 2026, which tech trends should Ghanaians be paying close attention to?
Thank you very much, Daryl. So I think that tech has now become very part of us generally, and especially you're looking at quite a number of Ghanaians embracing tech in a very positive way. But in 2026, what I envision, or per the trends I'm looking at, I think that AI and smart automation is really going to be everywhere. I mean, usually you're going to have the hype around it where everybody's just talking about AI and all of that, but I think that it's gone way beyond that. If you're a very regular user on YouTube or on TikTok, you're really going to see that there's a lot of AI content that is being pushed out there. And so it gives you that indication that quite a number of people are getting used to the tools that AI is sort of infused in there, and to be able to use those tools to be able to be generating quite a good content to be throwing out there. But I think that one of the things that I might hint on is that quite a number of people should really be looking at prompt engineering and being able to look at most of these tools so that they can sort of use the tools to their maximum effect.
Right.
Again, one of the things I'm looking at really is 5G connectivity as well. I think that it's really safe to say that Ghana is really in the same space to be able to have the adoption of 5G. And so we're really looking forward to that hitting our phones in the very most recent time. In the next 2 to 3 months, we're looking at quite a good connectivity when it comes down to 5G and 4G plus on our phones.
Yeah. Interestingly, AI was also top on my list. How prepared is Ghana to adopt AI responsibly, and where are we already seeing its influence locally?
So I think that, like I had mentioned already, we're seeing this influence really in most of the daily lives of people. I mean, people are writing emails with AI, ChatGPT. They are sort of adopting just different quite number of tools rather than just the ChatGPT. I use cloud like a lot because I do a lot of development. And so you're seeing it in the coding sector, in remote working sectors. You're seeing it in content generations. You're seeing it in YouTube content generations. Quite a number of people are sort of using it for social media and marketing purposes as well. I think that it's sort of integrating quite across different sectors. I'm really yet to see it really hit the financial sectors, like seeing it in banking, mobile applications and all of that. But I think that it's safe to say that it wouldn't really take quite a time to have most of these in there to be helping us look at our financials, grade our financials, look at investment tools and all of that. I think that it would really be soon. By the end of the year, we're going to see quite a number of people doing quite a number of integrations really across these sectors.
All right. Second on my list, I mean, you veered into internet connectivity, 5G and all, but second on my list was digital payments and fintechs. They are going to continue to grow. But fraud remains a concern. We even actually had a story on our network a couple of days ago about Momo fraud and how businesses lately do not want to accept any form of payments on mobile money. What changes or innovations should consumers and businesses expect in that sector this year?
So, Daryl, I'm actually the CTO for Blue Penguin, which is one of the biggest fintech companies. I mean, they had won the MTN Momo Best Partner last year, so it gives you an indication that they're doing some quite good work on that. Per the data I sort of sit on every time, I'm seeing quite a higher growth with payments and digital payments across boards, maybe because of the methods, because we deploy POSs across, and so it makes it safe for people to sort of make payments to POSs either by a touch of their credit card or by Momo directly from merchants. And again, I think that the connection between, say, BluePay and then the banks gives it that leverage. I mean, looking at that gives you some level of data to still see that there's some level of growth, even away from the fraudulent activities that is sort of associated to digital payment. But there are quite a number of things that comes in strongly. Personally, I had taken almost about 3-4 examinations in cybersecurity last month, which was very intensive. It gives me a whole understanding into how some of these fraudulent activities is also being curbed. The recent arrest in cyber crimes really is also on the high rise, and so it gives us some refreshing points to feel that even though there are some downsides to digital payment, we're also seeing some increment in terms of people being very comfortable to make payment digitally. And then we're also finding our ways in terms of cybersecurity to bring down the atrocities within that sector.
How vulnerable is Ghana's digital space, and what should individuals and institutions be doing differently this year?
I think that more of it has to be with connecting with the right partners, number one, because there are quite a number of digital payment and fintech companies around. And so you basically have to be very careful who you're connecting to. Number two, I think that the fintech companies really should be looking at doing a proper collaboration with the banking sector as well, because that sits as their base for most of the transactions that comes in. And so it makes it easy whenever fintech companies are sort of having that better collaborations with the base point, and they're allowing transactions to sort of go through easily. It makes it better off for most organizations and even individuals to be very comfortable to deal with them directly. I think that sets up the tone for them.
All right. Let's talk about startups, small businesses, because we have an interest in there too. They are watching us today. What practical tech skills or digital tools should they focus on this year, 2026, to stay relevant and competitive?
So I think that the one thing I could say is that startups could really start looking at making leverage with remote working skills. It's one of the things that really helps to grow companies rather than having offices choked with people. I mean, you can always have some of the skills coming quite on remote front, because quite a number of the people who are building startups, especially in the tech fields, are not really very stationary at one place. And so far as you're really rolling out remote working opportunities and getting different skills coming, I think that it gives the growth process for a lot of startups that leverage. Secondly, I think that policies. Over the last almost about 6 months, there have been quite a number of policies, almost about 12 policies and bills that have been released. I think that it's better off that the legal teams and the policy teams for most startups should really be looking at some of these policies that have been rolled out, get to understand them, get to have it integrated, and how they're going to be able to get to take advantage of some of these bills and policies that are around to grow their businesses, because you can't build businesses in silos without having to consider policies and then also consider the reality on the ground as well. So that's one thing I might say. Again, integration of AI would still come in strongly, because you probably want to put in AI and big data to do a lot of analytics as well in these business sites. For you, it gives you that growth point for you as well. And then I think a little bit of creativity in marketing purposes should also be. There are a lot of influencers out there that are now looking at growing some of these brands. You could tap into their be able to push it out there for us.
Great to speak with you, Henry Kobler, lead for Eyes of Africa. Appreciate your perspective. And that's the marketplace. Thanks for watching, everyone. More news on our website, myjoyonline.com/business. More on the latest GDP numbers. The monthly GDP estimates, also dollar demand picking up. myjoyonline.com/business. We leave you with today's episode of Money Lab.
Hello, welcome to Money Lab. My name is Paul Manti, MD of EDC Investment Limited. The last few weeks we've been discussing the subject matter of personal finance, and today I want you to know that if you want to gain financial freedom, then you need to focus on shutting down liabilities and building assets. It's as simple as that. What is an asset? An asset is anything you put money in that will bring money back to you. What is a liability? Anything you put money in that takes money out of your pocket. This is according to Robert Kiyosaki. The rich buy assets, but the poor and middle class buy liabilities they call assets. You want to gain financial freedom from this. After this episode, focus on putting your money in things that will bring money back to you. Simple things like treasury bills, like the EDC fixed income fund, EDC money market fund. These are things you put money in that brings money back to you. Many thanks for making time for Money Lab, and remember, financial independence is possible.